But let's do one thing. Volume-led growth will return for HUL from the second half of FY23. That's not me. That's the word coming in from HUL's CFO, Ritesh Tiwari. In an exclusive conversation with my colleague Shilpa Ranipeta, Ritesh also says that further price cuts for soaps, detergents and shampoos are set to hit the market. Listen in.
For FMCG business overall market, long period, look at last 5 years, 10 years, 20 years, growth typically comes 2/3 from volume and 1/3 from price.
Yeah.
Given the amount of inflation that we had seen for last 1.5 to 2 years time, growth has been led by pricing. What will change going forward as commodities are tapering off? We are seeing sequential declines as well in many large commodities. Price will taper off, and going forward, the growth will be volume led. Within that, if I tease out urban and rural, within the flat volume, urban is growing by 3%, rural is still declining by 3%. But the way we see this point in time, that the entire slowdown that the FMCG had seen, especially in volume, that is bottoming out. Rural has also substantially recovered compared to what it was at a very high single-digit volume decline at one point in time. It's at 3%. If I look at Hindustan Unilever, last 2 years we've seen 30% inflation. In a bucket of 2 years, that's completely unprecedented.
Yeah.
Now, this inflation is not going further. In fact, we are seeing some sequential coming off of few commodities. So the way we see going forward, the balance, as I mentioned earlier, we will start moving to a period where growth will be volume-led. Now, I don't see this point in time price getting in mix in terms of adding to the total growth. In our view, typically volume recoveries will take some time, but growth will still be volume-led for next few quarters going forward.
So you're saying next quarter onwards, we can see volume-led growth already?
Of course, there'll be a balance for one more quarter, June quarter, but definitely as we move forward towards later part of the financial year, it will definitely be a volume-led business that will happen. It will take a quarter or two for it to further stabilize from the peak of 7% that we've seen in the recent period, but you will see that price growth tapering off.
Right.
So yes, in next couple of quarters, you will see volume leading price in terms of total growth composition.
So second half of this fiscal?
Indeed. Second half of this financial year, you would expect growth to be volume-led.
Right, great. And, in terms of rural also, we're seeing some recovery. The rural slowdown has bottomed out. That's what even Nielsen's data is also suggesting. But, we've had a heat wave, we've had unseasonal rains, we've seen that impact on farmers. I mean, how do you then see the rural growth panning out in the next couple of quarters? Do you think it's going to continue remaining under pressure?
From here onwards, few variables very important to see. What will now start triggering better version of growth in rural areas. Monsoon, to your point, is absolutely very important element. So I guess we got to see how El Nino, the quality of rainfall, the quantity of rainfall, and the resilience of the rural infrastructure that we have in agriculture all play out, and we will hence have a little better read in few months' time.
Want to talk a little bit about inflation and related to that. Now, with inflation cooling off, last quarter we've seen some grammage increases and price cuts that have been taken. Is it safe to say that price increases are behind us, and will we see more benefits of inflation and the commodity prices cooling off being passed on to consumers?
At an aggregate level, answer is absolutely yes. Now, there's a meaningful correction which has happened in skin cleansing and in laundry in terms of commodity, and which is why in these categories we have taken price cuts. Equally, in many places we have done volume increase, either giving a soap free with a bundle of soap, or adding more grammage to an existing soap, or for that matter, adding more powder to a pouch of laundry. So that has happened. In terms of hair, when you look at bottles, hair bottle prices have been intervened. We have decreased prices. The net price the consumer pays for buying a shampoo bottle, we have intervened in that space. So consumers have seen benefit and advantage. As I mentioned, it's always a trade pipeline, but they have seen advantage benefit coming in. There are very few elements of the portfolio where we have done price increases. That is limited, I would say, to a portfolio called HFD, by and large, health food drinks, where milk prices, cereal, barley, those materials, soft commodities as I call them, agri materials, we have seen prices of those commodities going up. And hence we have taken price increases in that.
Are you looking at passing on more? Can we expect more price cuts going forward?
It's a large part of price cut, I would say, we have started invoicing, we have put in the market, but as I mentioned, it's always a trade pipeline. By the time consumers experience that, it takes few more months.
Correct.
So we have done large part of the price decreases because commodities have come off, but consumers should take, in my view, a few more months for them to fully experience the price cuts that we have done.
And on the same lines, talk about margins. What's the margin expansion outlook also looking like? Now, is it safe to say that the worst of margins is behind us? And in that sense, what's your outlook on operating margins going ahead, and also for gross margins? Do you think we'll reach the 50% plus levels in the next 2 to 3 quarters?
At this point in time, the focus remains on gross margin. If we talk about Hindustan Unilever, in last couple of years' time, given the high amount of inflation in last 2-3 years' time, we have dropped 600 BPS off our gross margin. This 600 BPS gross margin got dropped because of the point I mentioned earlier. Cumulatively, last 2 years, 30% inflation in commodity cost. Against that, we took 18% price. So 12% price versus cost gap. That had a tell on our gross margin. Now, good news is, with a good job done continuously in the business on savings, driving savings across all the lines of the P&L, and commodities coming off. In the last quarter that we declared results, we had 9% net material inflation, we had 7% pricing. So a more than 1,000 BPS of price versus cost gap came down to 200 BPS of cost versus price gap. Our own gross margin, which had taken us 600 BPS hurt, has improved in last 2 quarters by 300 BPS. So almost half of the total margin decline that we had seen has come back, 300 BPS. Further, of course, job to be done in gross margin. Our margin where we are today, even if I look at last few quarters, more than 23%, we do believe it's a very healthy set of margin.
Okay.
And at this point in time, the focus will be volume growth, the focus will be gross margin, focus will be maintaining competitive price value equation, and focus will be investing in advertising, sales, promotion.
Right. But I'm still trying to understand like a rough timeline if we were to look at, while I understand the current, you feel like the current levels are healthy, the 50% plus, do you think it's achievable given the trends that we're seeing currently?
50% you mean in the gross margin?
Yeah, at the gross margin
At the gross margin level?
Yeah.
Absolutely, yes.
In the next 2 to 3 quarters?
Now that, how much quarter it takes is a point of conversation.
Okay.
Remember, when you end up doing price correction, that impacts the line of gross margin. And hence the price value equation for next few quarters, it will remain volatile across commodity categories.
I want to talk about M&A also. We've seen significant, and you did talk about one category that was very important in terms of the healthy snacks and the nutrition department where you had Oziva and these acquisitions. Going forward, are you looking at more in this space itself? Are you looking at other spaces? I just want to get an idea on, what's the M&A pipeline for you looking like?
There are some fabulous brands we have in the global stable of Unilever, and as they become relevant for consumption in the country, we'll bring them.
Right.
The spaces in which we want to operate, health and well-being, is a space where it comes on gut health, it comes on overall inner beauty, it comes on protein. Those are the spaces that we want to operate in, vitamin mineral supplement space in health and well-being. Equally, when I look at beauty and personal care overall and beauty space, again, where we do see a space of masstige price point, and that's the space within beauty which today is getting more excitement. And masstige is something which is more than premium. So when I talk premium, is 120 plus price index, but masstige starts 250 plus, for example. Yeah. And in that segment of the market, though it is niche and small today, we do see market basically growing very well in that space. And which is why then we launched 5 different brands in that space. But equally, there's a fabulous brand externally, which we think adds and can do a good job with our portfolio. We're always open for bolt-on acquisitions as well.
Okay, that's the word coming in from HUL. Let's slip into a quick break. On the other side of the break, Shrikant Chauhan will join in for some technical trades and give us an update on the market picture. Do stay tuned in for that.
CNG